Hi, it's Sammy from Secure Signals here. I'm just going to quickly show you how to draw support and resistance lines so you can trade it. This is beneficial for both Forex and binary options. So let's just get to the video. The reason why we want to draw support and resistance lines is because it's one of the most key, fundamental technical analysis tools that you can be using, as price tends to rally and reverse and break through these key levels. If you want to know more about this, you can check it out on my blog, which should be in the link in the description below. But yeah, so let's go click on the horizontal line. So what we want to do is we want to make sure the line touches at least 3 or more times. So as I said in my blog, a support and resistance essentially is the ceiling and the floor. The support is the floor, and the resistance is the ceiling. So if we start with the resistance, the ceiling, we want to see where price touches and has shown signs of rejection. So signs of rejection means just it's touched the level and it's just reversed the other way. So one of the main things is we should look for shadows. So shadows signify rejection. So what I mean by shadows is basically the wicks, and we're looking for certain candlestick movements. So as you can see here, we're looking for pin bars and dojis. There's a little doji here, pin bar here. So yeah, if we line them up, we want them to at least touch 3 times. So if I click here, so as you can see, it touched here twice, a few times here, a few times here, and a few times here. So as you can see, this is a really strong resistance zone. If price was to climb up here, and touch this zone eventually, I'd expect it to go back down. At the moment, it's 1 AM on a Sunday, so markets are closed, so that's why charts look like how they do. So I'm going to quickly plot a support line. There's a strong support around this level, and probably another support level here. I'll zoom in a little bit. As you can see, it touched twice there. If I scroll across, as you can see, it also rejected it here and bounced off to the breakthrough. Support and resistance zones also change. So as you can see, this is the resistance, and this is a support, and this is a support that I drew in. So if I could just remove this to make it simple for now. As you can see, this is a support zone, but previously this was a zone of, this was a ceiling, so this was basically a resistance zone at one point. If we look a little further back, if we just look up to here in the chart, price went up to this level, and then it just bounced back until it broke through. So it turned from a resistance zone into a support zone. Then as you can see here, when price shot up, it hit a new level of resistance, so around this zone here, and as you can see, it rejected it, and went all the way down till it touched here, and this is where it bounced back up. And as you can see, this previous resistance has now become a support. So if the market was to shoot up and broke out here and started developing up here, then this line here would also become a new support, and there'll be a new level of resistance. One of the major tips I have is, if you can't see the levels without squinting and looking hard at it, it's likely not to be a strong level. So what you should just do is as soon as just looking with your eye, just look for almost obvious levels. So as you can see, there's an obvious level here, there's an obvious level here, and there's an obvious level here. But what you want to do is you want to line them up and see if price action really occurred. So as you can see, these are 1, 2, 3 key levels of price movement. So what I like to do is I like to cycle up the charts to make sure my levels are actually strong and that they're accurate. So if I got to 5 minute, as you can see, we've got a lot more chart to work with and a lot more price action. So as we can see here, there's a key level here of price action. Price rejected once, twice, 3 times, 4 times, 5 times, 6 times at least from this level here, and then and we can see there's another level up here that we can draw in, for example. So as you can see now we have way more levels. So if we move back to the 1 minute chart, we have levels that we wouldn't have seen on just the 1 minute chart unless we scrub through, and that would have just taken ages. So yeah, the benefit of this is when you trade later and it hits the zone, you won't have to like keep checking up on your charts and keep redrawing support and resistance lines, because they would already be there. So that's one benefit. So if I just go back onto the 5 minute chart, so what you're going to do is you look at the levels that you created earlier. So which levels are created in the 1 minute chart? So if I just quickly make it blue. Okay, so if I go on the 5 minute chart, if I look at the levels I drew with the 5 minute chart, I can see which ones were actually quite strong. So as you can see, this resistance line that I drew here is a very strong level. As you can see, rejected once, plenty of times here. It did slightly break through and touch the new zone here, but then I think the news were all the way back down. A bit of a crazy movement. This is why I don't like to trade Fridays, because this is a Friday movement pattern here. And as you can see, there's several of those. So if you just look at this line, if we look at this line, we want to like basically adjust the line so all the wicks, it touches the end of like the tip of basically all the candles. As you can see, there's major price rally in here and here and here and here. So this is a very good level to trade on short term. Also, if we look at the support zone, if you just I'd align it a little bit further up till it lines up with these and this here and this here. Just a little further down. Yeah, I think this is the perfect level, because as you can see, when you're using the 1 minute chart, as each candlestick represents 1 minute, whereas each candlestick represents 5 minutes. So obviously the 5 minute candle will be more reliable than the 1 minute. So you want to basically just scrub through the higher time frames and then just basically make your levels as accurate as possible. So if I click on the 50 minute time frame, now those lines that I drew on the 5 minute time frame, as you can see here, these white lines here, I'd slightly adjust this one a little bit further up so it reaches the tip of the shadows here, touches the closing prices here, and basically just all levels of rejection. And even the same with the support line that I drew. Move this a little bit further down, probably up to here, just at the tip of these. As price just closed in, reversed, price touched in, bounced up, closed here, closed here, closed here, closed here, closed here, rejection, rejection, rejection. So yeah, hope you enjoyed this video. In my next video, I'll quickly go through a little strategy that you could use for binary options trading and how you can trade from these support and resistance levels. But yeah, that's it for now. For more information, please read the blog, as it will go into more depth and explain why we trade from these levels, and just quick notes on like what this video entails. So yeah, check it out. I'll see you guys later. Thanks.